Good morning, ladies and gentlemen. How are we all doing? And welcome back to another video. Now, today is quite an interesting Q&A. I guess it's a Christmas Q&A. We're a few days away from the big day. I popped a sort of Q&A in the community so we can get some really good tailored responses from the community members. A lot of them obviously are all singing from the same hymn sheet and are really now starting to see profitability with long-term consistency, which is great. So I always like to do a Q&A once in a while so we can keep flushing out any sort of things that people need work on or advice on. So again, it can consistently enhance them in becoming a better trader. So question 1 from Peter. Yeah, so Peter, it's a great question because, I've been through something similar sort of quite a few years ago. The first thing I'd say is, instead of, you are going to, I'm going to tie some with another question later you'll see on in the video, but the first thing I say with this is when you're out in those situations with your boys or friends or whoever it is, my first question to you is why can't you just have a non-alcoholic beer? So you're still in the sociable setting, you're still there and present if that's what you're fearful of missing out on potentially, but then obviously you don't have the aftermath of a hangover and you don't have sometimes that next day brain fog, or it could be a couple of days. I know as I get older, if I do still have a few too many drinks, and it's a rare occasion now that happens, I'm feeling for it for a good couple of days and I'm not on it in the gym again, and you just feel slow and lethargic. So that would be my first point. My second point would be if you were then to start getting maybe a bit of backlash for drinking sort of non-alcoholic beers, or just having one or two when you go out, so there's no aftermath afterwards, you're getting backlash, then I would just question, who you're getting backlash from. Because obviously with you being a trader or getting into trading, your mindset is definitely different to people that aren't. It's a different breed of mindset to be in trading. And so if you find that people aren't supportive of your choices, then unfortunately it's just one of those things. As you get older, we naturally grow apart and veer from people. What I would say to that, it doesn't need to be seen as a bad thing or an emotional thing, because at the end of the day, if your priorities are aligned correctly, I know probably, correct me if I'm wrong, you'd rather that trading took off you. You'd rather that trading was made a success for what it can bring to your life, your quality of life, your family's life. So my big thing to that is start with non-alcoholics. So you're still sociable, you're still seeing your friends, because I'm sure they're lovely people that you still want to hang around with. But then if you start getting backlash, that's when it becomes a bit of a problem. And that's when I would just start naturally distancing myself. But, let's hope it will never get to that stage. So Hassan asking about funded accounts. So this day and age, so I'll keep it tailored to yourself and your situation and most people's situation in the community. Funded accounts are obviously a brilliant tool, or a step ladder if you like. There's another video I've done where funded accounts should be the penultimate sort of platform, as in once you've nailed strategy, once you've nailed risk management, once you've nailed discipline, once you've nailed the whole package of becoming and seeing consistency in your results, then that's when prop firm scaling then becomes brilliant. And then that's how you rinse and repeat that to then eventually pull capital out into a personal account. So eventually you're self-sufficient and you're not relying on anyone. So prop firms, I do think they are a fantastic way, especially bridging that gap between getting you to reduce your typical 9 to 5 working hours. If you can get even just a consistent payout of £3,000, £4,000 a month, that can massively take the pressure off, day-to-day life, day-to-day bills and expenses. And it can allow you to start dropping down your hours to potentially part-time if you work a full-time job at the moment. So prop firms, definitely, they're a fantastic, they're brilliant to have around. Obviously, I'd only ever be recommending FTMO and You Funded just because of their sort of repertoire, and they are, they're fantastic businesses led and built the right way for the trader to actually win. But no, prop funds I think are fantastic. As I always preach, if you can simply just make 2 to 3% a month, it takes a huge amount of emotional pressure off a trader. It allows you to really focus on quality over quantity. And it's then just a simple case of making sure you can access anywhere between 100 to 200K worth of prop firm scaling, because then that 2 to 3% a month starts to look really, really healthy. So Victoria, you've obviously asked about balancing your job, uni, trading, personal life. I think, I'm only 28, so I'm always saying I'm not old, but I'm obviously, I know we've had a few one-to-one calls in the past, and you're obviously, many, many years younger in sort of your early 20s. So I still think I can probably give advice on this. First of all is naturally you will grow apart from friends, that you maybe had at school, you maybe had at university that you were once incredibly close with. Now that's nobody's fault necessarily. Everybody just goes on different paths at different speeds. Some people have different priorities in terms of some maybe, in terms of career wise, or it might be someone like yourself where you're prioritizing on your own investment with your trading and, leveling your life that way. Some people might settle down early. Some people, there are so many different avenues, and there isn't obviously one right or wrong. What I would say to you is don't take it personally. I would double down on what really truly matters to you. So if that is your family, that is your other half, and that is obviously your trading, then prioritize those and double down on those, because ultimately that's what's going to give you fulfillment. You've got to wake up every morning being happy with your life, or at least in a position where the journey, the trajectory on the priorities that you're prioritizing every day are working towards those main goals. So you have to put yourself number one, as selfish as that sounds. You simply have to. I think, it's natural to grow apart from many people. And again, speaking from experience now, I maybe have, 3, 4, 5 true friends that I can call on. And that's healthy. That's normal. Some people would argue that's quite a lot. But family is most important, like you said, relationships and that side of thing. And as long as all of those parties are supportive of you, that is the big thing. So I wouldn't worry about it too much. Obviously, if you're trying to, check in with friends still and make an effort and you're not getting much back, just let it be. Just let it be. What's meant to be will be, and will come around again if it's meant to be. It's the same with relationships as well. But yeah, that would be my advice. And like I said, it's not necessarily, you use the word cutting people off there. It's not necessarily that you're deliberately doing it. It's just that you're prioritizing your goals. You know what you want by the sounds of it. And I think that's incredibly healthy. And people can either get on board with that and support it, or they can obviously leave. So, Kenneth, how did you get better with dealing and losing streaks and periods when the strategy doesn't seem to be winning more than usual? So this is the beauty of the strategy, if I'm being honest. It's rare, touch wood, it's rare I will go on any form of losing streak. Now, don't get me wrong, they are absolutely plausible, but I think they are more common in certain approaches to the markets than others. My strategy, obviously it's been stress tested for a very, very long time now. And it's rare I'll go on more than maybe a 3-4 losing streak. And I wouldn't really deem that as a losing streak. A losing streak would be when you're looking at maybe 6, 7, 8, that sort of thing. 2-3 losses in a row is totally healthy, totally normal. What I would say to that is where I get my bulletproof mindset, if you like, in terms of that confidence and not letting that emotion waver when I've maybe had 2 or 3 losses in a week or a couple of weeks, is I just go back and draw my data. I've got countless tens and tens and tens of years of this strategy. And again, I'm aligning my trades always with the trend. They are always with a higher time frame bias. They're always in sync with the corresponding index. There's all these factors that ultimately just keep probability in my favor every single time. And as long as you don't break that rule set, then you should steer pretty well on the right side of obviously consistent success and just going through periods of maybe 2 losses back to back or 3 losses. It's rare that I'll go on a proper official losing streak these days, because the losses I do take, they're great losses, but the wins I do take, obviously, like I said, the strategy is got a lot of experience behind it now, and again, it minimizes downturns like that. And the beauty of the strategy again is you can go long or short with it, again, as long as people are applying it properly. So again, even in downturns of market turmoil, which is normal, may I remind everyone, it's cyclical, it's healthy. We expect big downturns in terms of bearish markets, for example. We can still short that. We can still react positively and short that, because the strategy works beautifully, both bullish and bearishly. So, in terms of emotion when you're going through that, so for people that are maybe obviously not on the similar level of experience just yet, this is why I preach about going away and doing the data, because it's so much easier to have that internal monologue with yourself when you maybe are on a losing streak and just think, well, look, I know my edge plays out over 4 weeks, over a quarter, over 4 quarters, over a year, of course. that you know eventually, it doesn't matter if you go through X amount of losses, the data supports the strategy. As long as you are consistently executing on it, then brilliant. So there really does come a lot of confidence and a lot of that bulletproof mindset in your strategy. It's the same with, it helps with entries, as you know, in terms of being very cutthroat. And this is why so many people struggle with it, because so many people are not prepared to go away and do the hard work and do tens and tens of years worth of data. So it's a bit of a combination, really. And obviously, the better you get, the better you refine things. And obviously, backtesting again helps with this. It will minimize proper losing streaks. It really will. So it's Cyprian. So about investments, stocks, crypto. So for me personally, in terms of money, I'm a big believer. I'm a big fan in Ripple XRP. It has fantastic industrial potential in terms of mainstream usage. It's very quick, can handle multiple transactions, and is much more seamless than compared to a Bitcoin that is very slow, very laggy, and doesn't perform awfully well, if I'm being honest. Bitcoin will typically be like a digital gold, which I'm sure you've all heard and has been branded about online. And I do agree with that. I do think the price of Bitcoin will continually rise gradually, subtly, healthily over the years, just like gold and silver have. But I don't think Bitcoin will ever become part of our mainstream society in terms of actual transactions and mainstream banking. So Ripple, big holder in. I do like that. And dollar cost averaging in. And then the other thing would just be parking it into then real estate. So park it into flats, things like that, where they're not a huge amount of capital, but they have a huge amount of rental potential, because lots of young people in their 20s and 30s like flats. They're nice, they're safer. So I in terms of portfolio, it's not hugely diversified, if I'm being honest. It's just parked in a couple of things, but those couple of things being, in my opinion, quite safe, especially from a real estate perspective. Longer term, I'd be looking at maybe a few watches. Again, I like my watches, but I'm not a huge lover of them. So if I did buy any, it would be purely to park capital, where money, the value of that money can be held. So it'd have to obviously be specific types. But other than that, it's just indexes as well. And in terms of a typical stock portfolio, again, just anywhere between sort of an 8 to 11% a year, which is just ticking along in the background. But the problem with being, when you're trading properly and successfully, is you know how much money you can make, compared to obviously putting things into a typical index fund, for example. So there is a portion allocated into indexes, but it's not a lot, if I'm being honest, because I can make my money work harder for me through trading. So Kenneth, again, sort of the question around sort of back testing versus forward testing, my strategy, my course, you need to go away and do both still. Yes, you're right. The course, my strategy, whatever you want to call it, has had that, as I said earlier in the video, tens and tens of years worth of data behind it. But only I know how to use that data. Only I've been through that process there and then in terms of testing it. And seeing the little details, the little refinements that come my way. As you know, with my strategy, there's a slight degree of discretion depending on the type of trade, depending on the type of situation. And although you guys probably know that from all the market breakdowns and from the course and so on, you only get better at it, and you only become a bit of a savage with executing it if you go away and do that back-tested data. So both back-testing and forward testing, both equally important. But I would advise you still go away and stress test it, because again, my strategy on certain pairs will work a lot better than others. Again, there's all these little facets, little details that come about from going away and doing that work. You might find you only like trading a certain few pairs. So you need to go away and stress test my strategy on those few pairs to see, okay, what behaviors does that pair exhibit with my strategy compared to others? And that's where you get into the nitty gritty of refining things. So then ultimately it reduces the amount of losses that you're taking. It reduces any losing streaks or proper losing streaks in the future, which we've already covered. There are so many little refining details that backtesting properly does. So I'd advise you go and do both, but at least you can backtest a strategy and take the strategy for your own use and know that it's trustworthy. It's already been stress tested. It's just now about tailoring it and tinkering it to your personality and the way you like to trade. Because as you know, the strategy works on pretty much all time frames. But obviously, aside from my strategy, I'm more swing trading, I'm more higher time frame based, but that's got nothing to do with it has got something to do with the strategy, but it's more to do with the fact that they're more trustworthy. They give us the overall direction of where price is likely to go. So I hope that answers the question. So taking partials for me are an interesting one. So let's give a couple of examples so it's practical and you can apply it straight away to your trading. So for me, partials will more come from when I get stopped out in profit. So for example, gold has been a perfect example of this week. It was running really nicely, 280 odd pips. I think it was about 2.5%. And then it's reversed on us and it's hit my stops, taking me out for 0.5% profit. So I know that's not a deliberate partial, but that is how, again, based on the strategy and the data behind it, I know the majority of the time, or most of the time, that minimum 3% target will typically play out. Obviously, not all the time. Nothing's a given in the markets, but you know what I mean. Now, so I would take partials like that, but obviously they're kind of forced partials. But obviously, again, at the same time, with that type of partial taking, risk is always covered, risk is always taken care of. And if it takes me out for 0.5%, it takes me out for 0.5%. That is 0.5% still added to the account balance. So, that is one way where I typically take partials. I know that's not me actively closing the trade. It's more obviously the stop loss forcing things. Now, typically, if you're in a swing trade, and this is where obviously hence why I swing trade more, if you are around 2%, 2.5%, if you take partials off the table early, that is okay to do, especially in your, not beginning phase, but especially in your growing phase, because it helps you bank a little bit of profit behind you, a little bit of confidence, a little bit of momentum behind you, because you're naturally in your beginning, or you're even in your first 2, 3, 4 years, you are going to incur more losses as you refine things and as you get better as a trader, like anything in life. So I don't mind you doing it, but I wouldn't want you taking partials at 0.5% deliberately, or 1% deliberately, or 1.5% deliberately, because it does skew your risk reward to a degree. What I'd be saying is if you're looking at taking partials at 2.3% or 2.5%, then in terms of probability and your edge playing out over time, factoring in 1% losses, you should still be profitable because you're taking over 2%. Okay, if you're taking anything less than that in terms of partials, not good. And again, a lot of the time then, if that trade runs on, again, it's great for the confidence side of things. So what I would say is, I'm just going to read your question one more time because I know someone else commented adding a part to the question. And this is where trailing stops are brilliant as well. So again, you're always, if you do get reversed, you do get stopped out, which happens. It's fine. It's life. It's the market. You're still banking a degree of partials. I know, again, it's forcing your hand. So let me just reread that as well. Yeah. So my other comment was going to be, if you are looking at obviously taking partials, if you are around, again, that 2%, 2.5%, and you're maybe coming up to a significant fib level, for example, or significant higher time frame point of structure, or we're looking at potential EMA where we have a potential rest phase on our hands, then again, I would have no harm in you taking partials, because what you could then do if it's a continuation trade on then that maybe that natural rest phase or that natural pullback that rest phase provides, you've taken your 2%, for example, partials, and then you're looking again at scaling back in, for example, on the lower high if we're in a bearish market. And I hope that sort of makes sense. So basically, the initial position's 2.5%. You're coming up to a significant area of interest where we might get a bit of a slowing or a bit of a reaction. So again, there'd be no harm taking partials there particularly. And then once we still see, let's say that it pulls back because it's had a rest phase, but it still makes a new lower high and formulates that confirmed lower high, and that's where you can then look at scaling in again with obviously appropriate risk and so on and so on and so on. So there's little ways of doing it. For me personally, I don't typically take partials because I have so many trades under my belt where I know that 3% will be met, that 3.5% will be met a lot of the time. Obviously not all the time, nothing is 100% concrete in trading, but I can say that with a lot more confidence because I've been around for a lot longer and have the data and results to prove it. Whereas anyone in their first 2-3 years, I can appreciate it can seem incredibly frustrating when you're 2.5% up and then the trade goes against you. But that's why I talked about that first example where you have stops trailing or stops are in profit and so on. So I hope that answers the question. If not, of course, you know where I am in the DMs and we can always chat about it. So guys, I hope that helped. I've tried to keep that succinct, but as informative as possible, as always, so you can take as much value from it. If you guys have any further questions, please don't hesitate to drop me a line in the community. Obviously, drop me a line on Instagram if you're watching this on YouTube. But I hope that helps. And I just want to say Merry Christmas to everyone, and we'll see you guys on the next video.